Welcome to the deep dive. It is Friday, May 2nd, 2025.
And we're your hosts, digging through the data streams for you.
Today, we're zeroing in on, well, quite a bit actually. Global economics, markets,
The situation in China, some updates on that S2 underground story.
and finishing up with other news from the US. So, yeah, let's jump right in.
Okay, so the economy first.
Yeah,
Seems like the place to start.
definitely. And the big headline coming out of the US is that the economy actually contracted in the first quarter.
Shrank. Wow. By how much?
Saw a 0.3% annualized fall in inflation-adjusted GDP. Now, put that into context.
Yeah.
It's the first time the U.S. economy has actually shrunk since 2022.
Right. And everyone's kind of looking at Trump's new trade policies, aren't they?
Yeah.
Wondering if this is the first impact.
Exactly. Especially when you compare it to the average growth we'd seen before, around 3% for the last couple of years. Big difference.
So what's behind the drop? What do the numbers say?
Well, two main things really stand out. First, a really historic surge in imports.
How much are we talking?
Up 41.3% annualized. That's the fastest pace in nearly 5 years.
Wow. 41%. Maybe businesses trying to get ahead of tariffs, like you said.
Could be. And the other factor was a pullback in federal spending.
Okay, so those imports, they must have really dragged down the GDP figure then.
Massively. Net exports subtracted almost 5 full percentage points from GDP. That's the biggest drag we've seen from that category.
5 points, that's huge. But were people still spending money? Consumers?
They were, yeah, but more modestly. Consumer spending rose 1.8%.
Which is still positive, but
But it's the weakest growth we've seen since mid-2023. So positive, but definitely slowing down.
sounds like a real mixed bag then. Slowing consumer spending, but what about businesses? Were they investing?
Interestingly, yes. Business investment in equipment, that actually jumped 22.5%. Pretty striking growth there.
Huh. So maybe businesses are still feeling, I don't know, optimistic. Or just tooling up for this new environment.
Could be either. The thinking is this import surge might reverse in Q2, which could, temporarily boost GDP again.
Right, a temporary bounce back maybe, but the longer term view.
Well, really uncertain, yeah. We're hearing from economists like Carl Weinberg. He's talking about this corrosive uncertainty kind of hanging over everything. There's real concern these tariffs could push growth negative again later in the year.
It really highlights how tricky this whole situation is, a real balancing act.
And then there's inflation, which is also not exactly straightforward.
How so?
Well, the Fed's preferred measure, if you strip out food and energy, it was actually flat in March. Softest reading in nearly 5 years.
Okay, so inflation cooling maybe?
But then a different underlying inflation gauge, that actually rose to 3.5% in the first quarter. That's the highest in a year.
So, mixed signals. You can see why the Fed's kind of stuck in that wait-and-see mode,
Yeah.
right? Especially with all the tariff uncertainty on top.
Exactly. They're just holding tight for now. And those tariffs, they're really biting. Bloomberg Economics put the U.S. effective tariff rate at nearly 23%.
23%. Wow, that's
Highest in over a century. You have to think that's having an impact.
for sure. Are we seeing signs of that filtering through, like to households?
Yeah, there are indications. Strain on lower-income households, definitely. Confidence indicators are dipping. Retailers are starting to sound warnings about, weaker spending on non-essential stuff.
And didn't Trump mention tax cuts funded by tariffs?
He did float the idea, yeah. Income tax cuts for those under $200,000. But let's just say economists are pretty skeptical about the math working out.
Right. And you mentioned federal spending pulled back.
Yeah, it fell 1.4% in Q1, first drop in over 2 years. That included an 8% cut in defense spending, partly because of the pause in Ukraine aid.
Interesting. How did the markets react to the GDP news?
Pretty muted, actually. Trump blamed any market weakness on Biden-era inflation, which is, well, his take.
And what about public opinion? How are people feeling about the economy?
Well, a CBS News poll just came out. 69% of Americans feel the administration isn't doing enough on prices.
69%. That's high.
Yeah, and approval of Trump's handling of the economy dropped too. It was 51% in March. Now it's down to 42%.
Oof. So that gives you a sense of the public mood. Lots of moving parts then. Q2 feels pretty pivotal for the U.S. economy.
Totally pivotal. And it's not just the U.S. feeling these effects, right? Japan's also adjusting its outlook.
Yeah, significantly. The Bank of Japan, they've just sharply downgraded their growth forecasts.
Sharply is right. They cut the 2025 GDP growth forecast from 1.1% way down to 0.5%.
Wow, more than halved it.
Yeah. And 2026 is down too, from 1% to 0.7%. They're also saying inflation's likely going to stay below target, maybe only 1.7% by 2026.
And did they say why? What's driving the downgrade?
Bank of Japan Governor Katsua specifically pointed to higher tariffs.
So again, the trade policy impact really shows how linked everything is, doesn't it?
Absolutely. The worry in Japan now is that inflation and wage growth could just kind of stall out, which makes future rate hikes, well, pretty uncertain.
They basically admitted there are extremely high uncertainties around trade policy,
Ugh.
right? Echoing what U.S. economists are saying.
They did. Their baseline scenario assumes progress in trade talks and no big supply chain mess-ups.
Which might be a bit optimistic right now.
They even admitted it might be, yeah. And all this is happening while U.S.-Japan trade talks are going on. Tokyo's obviously trying hard to avoid more U.S. tariffs.
So anyone expecting the BOJ to hike rates soon? This probably throws cold water on that idea. Suggests weak inflation is the main worry now.
Seems like it. They still want to raise rates eventually, get inflation to 2%, but that target's now pushed out to maybe fiscal year 2028. So yeah, similar anxieties across the Pacific, all tied back to trade.
Okay, let's shift focus then. China, what's happening there?
Right. China's dealing with a mix of internal issues and, well, those same external pressures.
Starting with some really sad news, unfortunately.
Yeah, that terrible restaurant fire in Liaoning province. Just awful. 22 people died, 3 injured. And right before the May Day holiday, too.
That's tragic. How's the government responding?
Very strongly, very quickly. Xi Jinping himself ordered a full investigation plus a nationwide safety review. Premier Lang echoed that.
A nationwide review. That's significant.
And the state council is directly overseeing the investigation, which is unusual. They sent a team from the Ministry of Emergency Management right away.
It sounds like they're really trying to show they're taking fire safety seriously. There's been public concern about this before, right?
Exactly. After some other high-profile incidents, public anger was definitely growing. So this strong response is likely about reassuring people. Early reports mention things like strong winds, maybe poor building design. The investigation will hopefully clarify things.
Okay. Moving to the economy in China. Something interesting happening with gold.
Yeah, a huge surge in gold investment. It seems Chinese investors are really flocking to it as a safe haven.
Driven by the trade war fears, recession worries, inflation, all that uncertainty.
Pretty much the numbers are kind of staggering. Chinese inflows into gold ETFs hit a record 70 tons in April alone.
70 tons. How much is that in dollar terms?
Roughly 7.4 billion US dollars. And that's more than double the previous monthly record.
Wow. So Chinese demand is really driving the global gold market right now.
It looks like it. Chinese demand was over half of all global gold ETF inflows last month. And their share of global gold holdings has doubled just since the start of this year, from 3% up to 6%.
Is that pushing up prices locally?
Definitely. Local demand is so strong that premiums in China have been as high as $100 US over the global price. The Shanghai Gold Exchange actually had to warn investors to be careful.
So why gold specifically? Are other options limited?
That seems to be a big part of it. Tight capital controls, the property market struggling, equities volatile. Gold becomes one of the main accessible options for many people.
It's fascinating. Even though global jewelry demand fell, overall investment demand for gold in China, ETFs, bars, coins, was up 170% year-on-year in Q1.
Yeah, 170% really tells a story about people seeking stability right now.
Okay, so what about the trade war itself? The U.S.-China dynamic? Still tense.
Still very tense. Beijing seems to be playing what some analysts call a dual-track strategy.
Dual track? How so?
Well, on one hand, the foreign ministry says, officially, no talks with the U.S. on tariffs in the last 24 hours.
Okay.
But then state-linked CCTV put out this cryptic post,
Yeah.
claimed the U.S. had reached out through multiple channels, but China sees no point talking unless the U.S. takes some kind of substantial action first. So it's a bit of push and pull.
Sounds like it. Are they taking any practical steps, though, to soften the blow of tariffs?
They are. China's apparently made a whitelist of some U.S. goods that'll be exempt from their retaliatory tariffs.
Oh, interesting. What kind of goods?
Reports mention things like microchips, pharmaceuticals, important stuff. And companies can actually apply for these exemptions. Suggests a more targeted approach, maybe.
Yeah, less of a blanket reaction. Any other signs of adjustment?
Well, Walmart apparently started ordering from Chinese suppliers again after a short pause. Seems they might be absorbing some costs themselves.
And on the investment side?
China Investment Corp, the big sovereign wealth fund, is reportedly pulling back from U.S. private assets, real estate, infrastructure, citing decoupling fears. They're apparently trying to sell off over $1 billion worth of those holdings.
Decoupling fears really taking hold then. What about specific companies caught in the middle? like Shein.
Yeah, Shein faces a huge challenge. That U.S. de minimis tax exemption ending soon, that's a big deal for them.
Because a lot of their stuff comes in under that threshold, right?
Exactly. It could mean their goods suddenly face 20% tariffs. And since about a third of their, $38 billion annual revenue comes from the U.S.,
So that's going to hurt badly. Are they looking at moving production?
they are considering it, yeah. Places like Brazil, Turkey. But Beijing is reportedly pushing back. They want to protect China's manufacturing base.
So Shein's kind of stuck.
Seems like it. We're already seeing them hike prices on some things, pretty significantly, actually. And they've cut back their ad spending in the U.S., too. Shows the direct impact these policies have.
Definitely. Okay, one more China item, something about the EU.
Right. A potentially significant diplomatic move. China has unilaterally lifted sanctions on several members of the European Parliament and their families.
Unilaterally, why now?
It looks like a strategic play to improve relations with the EU, maybe exploit some of the transatlantic tensions.
Makes sense. When were these sanctions put on?
Back in March 2021, it was China's response to EU measures over human rights in Xinjiang. Those sanctions really froze dialogue, stopped the ratification of that big investment deal, the CAI.
Right, the Comprehensive Agreement on Investment. So lifting sanctions might be an attempt to revive that.
That seems to be the hope in Beijing. The lifting applies to current MEPs and the Human Rights Subcommittee.
But not everyone.
Apparently not. Reports suggest sanctions are still in place for some other figures, academics, national MPs, think tanks, so it's targeted.
So will it work? Will the EU jump back into talks on the CAI?
Probably not quickly. There are still major concerns in Brussels, human rights, China's stance on Russia, trade issues. Those haven't gone away.
So it puts the EU in a tricky spot, balancing between the U.S. and China.
Definitely. A delicate position for them.
All right, let's pivot back stateside. Updates on the S2 underground and some U.S. news.
Yeah, a couple of things. First, as we touched on earlier, that U.S.-Ukraine mineral deal, it's officially been signed.
Okay, deal done. And there were some personnel changes too, right, in national security?
Yes. National Security Advisor Mike Waltz and his deputy Alex Wong both resigned.
That was tied to that incident with the Atlantic editor in the Signal chat, wasn't it? Though the details are still a bit murky.
Exactly. Following that, President Trump appointed Mike Waltz as the new U.S. ambassador to the UN.
Uh-huh. So moving Waltz to a different role. Any word on who replaces him as National Security Advisor?
Not officially yet. There's some speculation, maybe Special Envoy Steve Woodruff, but nothing confirmed.
Okay. And yesterday was May Day. Any major protests in the U.S.?
There were demonstrations in major cities, yeah. Turnout seemed varied, though. The biggest was probably on the National Mall in D.C., kind of keeping with the usual anti-capitalist theme of May Day.
How did it compare to, say, Europe or past years?
Generally more subdued than reports from places like Paris, where there were apparently some riots. And turnout in the U.S. seemed lower than previous years overall. A few thousand on the Mall, maybe a few thousand at a Bernie Sanders event in Vermont. Those were the main ones. Less intense than historically, perhaps.
Interesting. Okay, finally, back to that Ukraine mineral deal. Do we know the specifics yet?
No, the details haven't been released, but some analysts are saying the fine print might not even be the most important part.
Oh, what's the thinking then?
The main takeaway might be the signal it sends, that it marks an easing of that recent tension between Trump and Zelensky.
Ah, so a necessary step before any potential peace talks could even happen.
That seems to be the interpretation. Some analysts even suggested the U.S. was mainly looking to recoup war funding costs and might actually get less than Ukraine's offering on paper. But the symbolism is key.
Right, the relationship reset being the main point.
Exactly. So quite a week, huh? A lot to unpack.
Definitely. We've seen the U.S. economy dip, trade policies clearly having an impact there and in Japan.
China navigating internal issues like that awful fire, the gold rush, external trade pressures, and making moves towards the EU.
Plus, shifts in U.S. national security and that Ukraine deal signaling,
Right.
well, something potentially significant.
It really drives home just how interconnected everything is. You can't look at one piece in isolation, can you?
Not at all. And it really makes you wonder about the longer-term game here. These U.S. economic shifts, China's responses. How will global alliances reshape?
Yeah, and are these tariff strategies actually effective in the long run? What are the hidden costs or consequences we're not seeing yet?
Lots to keep thinking about, for sure.
Definitely. We hope this deep dive gives you some context to mull over.
And if you find these discussions helpful, please do consider liking, subscribing, or maybe supporting the show through the platforms we mentioned. It helps us keep doing this.
Thanks for joining us.